certainly is disappointing. And, coming in this morning in the U.S., we're relishing in the fact that Chinese markets up 3%, some European markets up 2%. And right now we're in the red. It's really sad. But the fact is, it all revolves around China and oil, both of those things. And people have to realize that with China, they're going through a giant reorientation process with their economy, going from investment and export to services. It's been going on for a long time, and their growth is going to slow down a little bit. And with oil, the price will continue to go down until we get some demand support, because right now it's just following all kinds of rumors, not fundamentals.
Well, the IMF certainly seems to have used this update to underscore the message that the slowdown in China, the prospect of rising rates in the US is churning up this uncertainty and obviously denting those growth prospects for 2016. Do you think we should be bracing for another tough year ahead?
No, I think it's just going to be a fragmented year ahead. It's going to be a hard one, but they're all hard. In hindsight, they're easy, but they're hard. I think a lot of this news has been very well telegraphed. Like, we know that growth is slow. It's going to be really hard until commodities find that bottom, until we get some demand. So until that time, I think keep the powder dry and look for good opportunities to buy.
Larry, Brian Parker from Sunsuper. Just back to oil for a minute. I mean, how much of you mentioned we really need to see some demand support, but how much of this is simply that when oil was up at 140 a barrel or so, that anyone who was anybody who had access to a drilling rig started pumping the stuff out? I mean, don't we really need to see some more of a supply response as well?
Yeah, Brian, a good point. But from the way I see it, I mean, supply can do a great job in stabilizing the market. It's something we've seen, at least history will show us that throughout all commodities. But it's not going to change the market. We need demand coming from somewhere to change that. That being said, I do believe we'll be into a rebalanced or a close to balanced market by the third quarter of 2016. And it's going to be really hard to repeat the supply response we had in 2015. On the demand side, when you consider the slowing GDP around the world, demand has been pretty decent, even with prices higher than they are today. So I make a case. It's sort of an outlier case, but we will see a balanced market in the third quarter.
We know, obviously, Larry, oil has very much been the big story as we've entered 2016. Is it going to be oil that actually leads all of these commodities through the cycle?
Yeah, unfortunately, I think so. I mean, when you have producers going bankrupt or just holding on to dear life with really no demand in sight, it just sets off these deflationary cycles that we're seeing. It just exasperates itself. It's going to cause currency issues that we're already witnessing. So until the time we see some real demand somewhere and the market comes into balance, it's going to be a rough road.
Obviously, still the question lingering around about where this low is for those oil prices and the lifting of those Iranian oil sanctions, certainly bearish, but it has been very well telegraphed. Do you think that's likely to have a lasting impact on those oil markets?
Yeah, it could, but you know what's funny? It's having an impact today. I mean, at least I think so, because I turn around and I see WTI drop so much. I'm like, I can't imagine why, other than the news came out of Iran pumping oil. But, they've been pumping oil, as far as I know, since the sanctions were lifted in July. And I think the news came out that, or the rumor came out anyway, that they were interested in pumping or producing over 1 million barrels a day when the market thought maybe 400,000. So that's going to glut the market again. But it's not supposed to have a short-term impact, but it is. The long-term, yeah, it could, because they want to drag their market share out of Saudi Arabia. It could be very interesting, and I think we're all being very, very casual about what could happen to oil this year, given that nuance.
Just wanted to ask you, I mean, I suppose it all does very much relate together, but the China GDP data that we got through yesterday, wanted to get your thoughts on that. I mean, no doubt there's a lot of discussion about the quality of the data, but does it show that the transition to the consumer-led economy is starting to take effect?
Yeah, I mean, I think we're in the very beginning stages, and Here's another data point that was very well telegraphed. So the number came out just a little bit worse than expected. In fact, I was really disappointed in the retail sales number that's not getting a lot of headlines. But the Chinese market rocketed higher by 3%. It was no worse than feared. But yeah, it's going through a gigantic reorientation. It's going to take a long time for them to do that. And we know that wages have increased there over the past 10 years. They are moving to a service economy and away from export only, investment only.